This is the Business Lens, where we go beyond the headlines and make sense of the numbers shaping your money, your business, and Nigeria's economy. Good morning. My name is Divine Alex. Stay with me. Let's connect the headlines to your business, your money, and the economy. Now, starting from the first one, what if I told you Nigeria has kept crude production above 1.5 million barrels per day for 3 straight months? I know a lot of you are, trying to find this somehow interesting, right? Now, so OPEC puts Q2 average production at 1.525 million bpd, up from the initial 1.388 million in Q1. And this is way above the 1.345 million bpd average in 2024 if we compare it. Now, July did slip by 50,000 barrels, but we are still pumping more than Libya and Algeria, according to the data that OPEC released. Now, so is Nigeria finally getting some consistency back into its oil production story? And while we are talking about production and the government's revenue, let's look at what customs is doing with its own numbers. Now, imagine collecting 4.03 trillion naira in 6 months. Yes, that's a lot of money. That's what the Nigerian Customs Service says it generated in the first half of 2026. Now, the bigger number, though, is that they said 11 trillion naira is their full year target. Now, Customs says automation and intelligence-led enforcement are helping to reduce leakages and improve collections. So can Customs get, from 4.03 trillion naira to 11 trillion naira without making legitimate trade more expensive? Do you think if they push further, because they already have 4 and the target is 11 and we are already gone 6 months and they only have 6 months left, do you think that they are definitely going to get to this particular number? And if they're going to get there, do you think this is going to make trade more expensive? Now, from revenue coming into government, let's talk about where government is putting some of its borrowed money. What if I told you, again, that the government has about 156.2 billion naira in the 2026 budget for projects financed through tied multilateral and bilateral loans, and digital enterprise is getting the biggest bites, which is about 89.3 billion naira that is allocated to the investment in digital and creative enterprises program, the IDICE, while another 36 billion goes to IDICE, like I mentioned earlier. Now, that's total of 125.3 billion naira combined. That's serious money behind Nigeria's digital and creative economy. But the real question is this: will it produce businesses that can scale and generate jobs and revenue? Or is this just another round of funded programs that we just hear in the news with big numbers? Now, stay with me. And staying with big ticket business decisions, let's move from digital investment to Nigeria's biggest refinery. Now, can you imagine having a 650,000 barrel per day refinery and still having to worry about getting enough crude and getting it at the right price? Getting enough and the right price have to work hand in hand. Now, government is considering changes to crude allocation and pricing rules for local refiners. The Dangote has said the current pricing structure can add $3 to $4 per barrel to its feedstock costs. So if those rules change, could cheaper and more reliable domestic crude make Nigerian refining more competitive? And if we are talking about a refinery that is this big, there's another question that is on my mind. What happens when its product starts looking beyond Nigeria? We've started having conversations around the fact that Dangote is already pushing towards, expanding beyond Africa. Now, what if Dangote's refinery isn't just about supplying Nigeria, but supplying Africa? Pengasan is calling for free trade of Dangote refinery products across the continent, arguing that removing barriers could improve fuel supply and create a much bigger market for Nigerian refined products. Now, think about that. A 650,000 naira BPD barrels per day refinery with access to a continental market. Could that turn Nigeria into a genuine regional fuel hub rather than simply a country trying to meet its own fuel needs? That is the question a lot of us have. Now, from physical fuel moving across borders, let's talk about something else that is moving very quickly, which is money inside the banking system. Now, look at this. The CBN injected a net 5.21 trillion naira into the banking system in just 1 week. And on August 11 alone, an OMO repayment put 2.48 trillion naira back into the system. Now, here's where the timing gets interesting. The CBN was also heading into a treasury bills auction targeting 700 billion naira. So we've got trillions returning to the financial system, while government is also looking to borrow. Where does that liquidity go next? Government securities, bank lending, or the wider economy? There's something there. And that liquidity conversation naturally takes us to the market, where Nigerians watch every naira. They watch naira every single day. Now, remember when the naira slipped from 1,361 naira 50 kobo to 1,365 naira to the dollar on Tuesday? That's just 3 naira 50 kobo, or roughly 0.26%, hardly a dramatic move. And then by Wednesday, it actually strengthened again, moving to around 1,360 naira 58 kobo per dollar, roughly 1,840 naira to the pound, and about 1,572 naira to the euro. So can you see what's happening? We are seeing a little back and forth rather than a clear depreciation trend. You're still waxing strong. But there's another FX number that I want you watching, which is the turnover. Now, what if I told you again that only $185 million changed hands on the official FX market on Tuesday? That's the lowest, NFAEM turnover in about 11 weeks, according to the CBN data, even as the naira moved slightly weaker that day. So the interesting question isn't simply, is the naira falling? It is rather about why activity in the FX market is becoming thinner. And what does that mean for businesses that need dollars to thrive? Now, and from the currency market, let's take that same investor sentiment straight into the stock markets. Now, this one will get investors looking twice. I think so. The NGX lost another 1.76 trillion naira on Wednesday after dropping 1.17 trillion naira on Tuesday. That's roughly 2.93 trillion naira wiped off the market capitalization in just 2 sessions. The all-share index fell another 1.12% to 243,967 points, with heavyweights names like Bua Foods, Unilever among major casualties. But here's the twist. Wednesday still recorded 28 gainers and 28 losers. There's a tie. So is this the beginning of a broader market correction, or are investors simply taking some money off the table after the huge run we've seen this year? Because we've actually had a great run since the beginning of the year. And that's the kind of market movement that we're keeping our eyes on here on the Business Lens. But we will discuss more after the break. My name is Divine Alex. Please stay with us. You're welcome back. This is still the Business Lens on Rapid Television, Abuja. Now, this morning, the numbers are telling a rather interesting story about Nigeria's economy. Oil production is back above 1.5 million barrels per day. Customs has generated 4.03 trillion naira in 6 months, and government is putting 125.3 billion naira into digital and creative enterprise programs. At the same time, we're seeing major interventions in the financial system, where the CBN injecting 5.21 trillion naira in net liquidity in 1 week. And then we get to the market and the picture becomes a little more complicated. We have the FX turnover fall to an 11-week low of $185 million. The naira moved between 1,365 naira to 1,360 to the dollar over 2 days, while the NGS lost almost 2.93 trillion naira in 2 sections. So there are some encouraging numbers, some warning signs, and quite a few questions in between. So let's unpack what those figures are really telling us about the Nigerian economy. And I have with me in studio Daniel Efa, who is a global business analyst and one of us. Good morning, Daniel.
Good morning, Divine.
So I want us to start with the OPEC,
okay.
and I have been curious because I want to know what you're going to have to say about this, because I remember that we've had a series of conversations around OPEC plus. Initially, when we saw the story that said they wanted to increase production, and you said something about them not even meeting the quota, and then we now saw the first time that they actually met quota, and you were like, okay, we've done it before, so it's not like we should start celebrating. We need to know how consistent that they're going to be. And today is looking like, okay, from that time till now, you know, there's been a little improvement, even though we had, you know, small issue. I think it was in June or July. What do you think about this? Are we seeing a genuine improvement in Nigeria's oil production capacity?
Okay, yes, improvement, yes, but should we still celebrate yet? No.
Okay.
It's just a quota that we've done. We've met our OPEC quota consistently. I think that we still need to do this for longer to be able to approach OPEC and say we want more on our quota increased, right? So this is the thing. I think that what we are seeing now is more of I think there is a level of consistent demand. The focus of the government before now is usually just to drill more oil and just make revenue out of it. Now there is an entire ecosystem that now rests on our efficiency to actually drill more oil consistently, right? So for example, I think I was seeing the data that out of the 1.5 million barrels, about 20% of that goes to local, which should even be more, but at the moment, at least 300,000 barrels out of that 1.5 goes to local refineries, of which Dangote takes about 95 to 97% of. But then there is now a sense of not just responsibility to revenue, there's responsibility to the ecosystems, to the sector itself, to be able to consistently produce. So for me, I don't know why we can't do way more than this, right? I feel like the ideal figure for Nigeria should be around 1.8 million barrels per day. That's when you include condensate, that should be like 2 million barrels per day, right? So that should be the near-term focus of the NNPC and its partners, to be able to get us to a point whereby we can consistently do 1.8 million barrels per day. So by the time we take out all obligations, government is still making considerable level of revenue while still supplying local refineries with as much crude as possible. Yes, we would have loved this to have been a very consistent conversation from the beginning of the year, because that would have meant that we would have made more money from the petroleum sector in terms of sales of crude, because average prices of crude this year has been around maybe $85 to $88 per barrel. Right now it's around 89, still hovering around 89, and because the tension in the Middle East is still there, there's a likelihood that we will still average will still go to as high as $90 to $95 per barrel into the end of the year. So whether we like it or not, it is not a conversation that has an option in terms of us keeping our production stable again, or if possible even increasing at the moment. I think the plan is to increase it. That should be the near-term plan, so that no matter what happens when you fall back to your quota. That should be what should be on the back of our minds right now, so that it will be easier to then get into the petroleum minister's OPEC committee conversations and now say we want our quota increased. Because whether we like it or not, there's a strain that the US-Iran issue has cost on supply, right? So it is only ideal for a country like ours that has not requested for a petroleum increase, a crude oil increase in over 5 or 6 years, to also say, let's give us our own also.
So what should a healthy numbers look like?
In terms of
how long do you think that they need to really keep it up for us to say, okay?
Minimum 6 months. So
we've done 3.
Yes, we also see what happens in the third quarter. That gives us an idea of, because what happens is that these are all systems. These are all production systems, right? So you cannot say this is a consistent production output if it has not done at least 180 days in turnaround time. That gives you, yes, whatever we've done for 6 months, we can now replicate it continuously and even say, how do we start how do we increase so that when there is a blip of any kind, you still fall back to your original 1.5 million barrels. So that should be the conversation at the moment.
So what numbers should we watch next? Is it solely on the production, or should we look at the reserves or government revenues or export receipts, especially to know whether the improvement that they've been doing is actually feeding through?
I think the first things first is the production first, right? Okay. Every other thing has an existing system in place that makes it efficient, right? How we sell, who we sell to, on what basis we sell, the terms of our agreement, they are all defined, right? Including the new crude for naira sales, for example, for local refiners, all defined. Or in fact, I think we've even been short of that by maybe like 3 million barrels or 4 million barrels. But then that is still active. We are still doing at least for the first 6 months of the year, we did about 300,000 barrels to local refineries per day, right? So yes, should that number increase? Yes, because even the players in the space, Pengasin and Co, are already talking about how do we sell more, and that's always been my conversation around. I think I've always said it here that what we built, what Dangote Refinery built, of course, Nigeria government also assisted, is an African business. It shouldn't be a Nigerian business. We shouldn't be so bent on ensuring that we get supplies from Dangote. No, it is a business that it will do more for us if it earns in dollars, which can give us a lot of dollar receipts, right?
Okay.
Than even local conversations, right? Because the market is deregulated. Everybody can bring in any product and sell, right? So you know that marketers will always look for the cheapest option, right? So if you look at the feedstock of whatever Dangote is doing, yes, it is mixed with both our crude and cheaper crude from Dubai and the US. It will still come out to relatively not as cheap as we would want to, right? And Nigerian people want cheap petrol, no matter how you look at it. And except there is a deal, I think I've heard people talk about the fact that there should be a refinery-based conversation in terms of to be able to push a subsidy kind of. Except that kind of conversation happens, you will still have marketers bring in or look for cheaper alternatives and bring in. So for us, in terms of what should be the most focus, the most important conversation for the government, it should basically just be, us being able to produce consistently first, which guarantees revenue calculation and revenue allocation properly, and also whatever comes for the local refineries.
Okay, now let's step away from the OPEC conversation and head straight to the customs. That is now saying that they've been able to, do the first 6 months from their 11 trillion naira target, and they were able to get 4 trillion naira. Now, but when we look at this, right, stronger collections can come from either higher trade activity or more effective revenue mobilization, even though they were able to attribute some of these things to some of the things that they listed. But let's look at this from a business perspective. Which one is this data pointing to? Is it between effective collection or higher trade activity? And how do you think this is going to take a toll on businesses?
Well, I think the customs would be the best people to really define what really helped them. But then, from what the report is saying, they are saying that they've added some level of market intelligence, some intelligence, some technological tools to really help them push more compliance. And so, funny enough, I don't have issues with the projected 11 trillion. They've done 4 trillion. That's almost that's more than almost 25% of their targets. And for customs, if they end the year with 8 trillion, I think that's still fair, because then if you look at our revenue allocation or calculations for the year in terms of our fiscal our budgets, appropriation bill, we were looking at 35 or 30 something trillion again in total. And if customs is projecting 11, that's almost 30% of it, and that's for me is even too much burden on customs, because there are so many revenue sources for the government. There are taxes, there's crude, right? So when you look at those and other mining activities, other mining conversations also. So when you look at those components, if customs alone is saying we want to do 30% of the total revenue, is already an overburdened conversation, right? Of course, we're also happy with the fact that yes, there has been some level of relaxing, particularly when it comes to the automobile automobile space, cars and all, in terms of reduction in taxes we get on those side. But then if you look at the numbers, yes, you would say to some extent there is a lot of increase in economic activity in terms of imports happening and all. Also, with whatever they are saying they've improved upon in terms of their systems, both of them should combine to give them this kind of that. And personally, I've not. I think customs have always been that consistent body that's always really brought the government revenue. Right? So for as far as they are concerned, it is a good number. Of course, we also know that second half of the year would naturally have increased economic activities. First half of the year, people tend to figure out systems and how to operate. Second half of the year, naturally, consumers even demand for more. There's a lot of demand you get going into the new year. The second half of the year has more festive activities, has more reasons for people to spend, and also, so that number should probably hit around the 8, 9, 10 trillion, which is for customs, as far as customs is concerned, it's a good number, and we can only build from there. So, but for totality of in relation to the government revenue, it is a good one, and we can only create more effective systems from this, and it can also help in planning to see that okay, what can we do in terms of what can we tweak, because what a 4 trillion in revenue means is that some level of business has happened, right? How can we increase that number in terms of increasing more imports, right? Because then you look at the sectors that are bringing in these numbers, you now begin to look at it one after the other and see how can we make business easy for them, because one of the things that always discourages port conversations, for example, custom conversations, is the ease, right? Of course, now we are seeing a lot of more ports being set up in Lagos, in Lekki deep sea port. So many other so many other deep sea, dry sea ports are also being created across the country. That alone would create would stimulate more demand, right? And would also, because whether we like it or not, we are also a conduit to some other countries, right? Like Cameroon and like Chad, Niger and co. So effective port management again from the customs would basically also drive more numbers at them. So it is a good one. If the customs is saying we're now introducing technology, it is a good one, because what it does is that it reduces the human intervention in these conversations, and when human intervention has been reduced, there is usually reduction of inefficiencies. Inefficiencies is almost totally eliminated. It is easier for customs to get its job done, and people are always.
Now, when we look at all of this, in as much as we are praising them for getting to this point, do you think that there's a point where aggressive revenue collections begin to become a cost of doing business issue for importers and manufacturers? Yeah,
so I think that customs all over the world have the same problem. Like they are always viewed as that's tax collector. So it's always like that, right? There's always that perception with but then the only issue that I think that most businesses have always identified is multiple tax collection at the port, number one. And number two is the stress in even making those payments, right? Number three is the congestion, for example, because for a long time we depended so much on just the Apapa port, and it made it very difficult for businesses to even imagine your goods waiting on the road for days or even weeks because that particular route is congested. So if we have multiple ports and there is no congestion, you get a loan that your goods can move. If you get something into the port within hours max, you are out of the port. It makes the conversation around importation easier, right? So people will definitely demand for more to stimulate demand because even for overall pricing, it also still plays a role, right? Because at the end of the day, what does custom really want is to make more money, right? If the guaranteed way to make more money is when more goods come in, right? So if you tighten, if you make it difficult to bring in goods, then you will actually not make more money.
So what is the more important metric now? Is it the how much customs collects, or how quickly and cheaply businesses can actually clear their goods?
Yeah, both works hand in hand.
So they have to work hand in hand.
Yes, so
there
because
should be a balance.
Yes, so because then, for example, if I've not seen the breakdown of the data, but I'm telling you, even with the reduction in taxes for cars, I can bet you cars still forms a large part of whatever customs is recording as numbers, even though there has been almost 50% on you get reduction in levies, right? So it is usually not about what the rate is. It's usually about how effective the port is. So that way, you realize that more people will do business, people will bring boosts in because it is easier for them. And overall, in the overall conversation, it's all what finds a way to also drive down inflation also.
Okay, now let's take a swipe to the next one. Since we're already talking about money circulating, right? Let's go to the fact that the CBN injected 5.21 trillion naira into the banking system in 1 week, and they were targeting 700 billion naira, through treasury bills. What does this mean? What does this tell us about CBN's current liquidity strategy, and where should we draw that line that the liquidity ultimately goes if it is to support productive economic activity?
So I think that what the CBN basically did, I think it's mandatory. They had to pay interest that were due. So whether I liked or not, that was going to happen. So the only thing that I think I said it in last edition that CBN has done when it comes to liquidity management. I think CBN has been effective with that because when you look at the kind of irregularities that CBN met, it would have been more chaos, right, if it had not stepped in and began to like dissect each of the issues one after the other. We had so much cash in circulation that begin to wonder what exactly is happening to the formal sector. And so right now, it has consistently mopped up, right, those liquidity. However, it will always cause another ripple effect, right? When you mop up too much liquidity, particularly when it comes to OMO bills and even treasury bills, you have to pay back interest at some point, and that is basically what happened.
What they were doing.
A chunk of that money was for interest payments. That will always happen, and because of the liquidity management strategy, there will always be another offer again to mop up more out of circulation. And so one other conversation really is the fact that when these monies are back into the system, what exactly do they just fly, make capital flight out of the country, or they go into productive conversations? And that is where we really need to really help the CBN. We cannot just allow funds really fly that easy. It should be easy, however, but then in terms of not finding another opportunity to go into, it's a big problem, because what we are seeing is that the funds most likely will fly, and I think it also doubles at the same time with the stock market also. So everybody's literally taking profit at this time, moving their funds out, and we will keep having that kind of surface level liquidity conversations unless we get to a point whereby we have things on the ground that people can actually invest in.
Now, can the excess liquidity eventually put pressure on inflation or the naira?
Yes, it will. But then it all depends. It's not going to be a sustained. It's just going to be a flash conversation, because whether we like it or not, in another 1 or 2 weeks, CBN comes back again to say, another OMO bill is out, another treasury bills to mop the funds back. So that is what I think the CBN has gotten control of, and it's easy for the CBN to keep managing it that way till we actually start building a sustainable economy that doesn't necessarily that just sees the CBN as an intervention agent, not necessarily one in command of economic conversation.
So now, at what point does liquidity become too much liquidity?
It always becomes too much liquidity when it is not controlled properly.
Okay.
And I think that it would not be an issue, at least for now, because we have high interest rates to always give investors that incentive to want to let go of liquidity, right? Banks have also been the ban on banks have also been reduced, so banks can also play. So whatever CBN does from now till the end of the year, there will likely be effective liquidity management from it. Yeah.
Now, but if banks, for example, have more liquidity, and the situation with the businesses that are still facing expensive credits, where exactly is this transmission mechanism breaking down?
So I think that the way the Nigerian economy is structured right now, I think that we should stop looking at the commercial banks as the provider of credit for businesses, I think we should start looking towards merchant banks, towards microfinance banks for MSMEs. We start looking at Bank of Industry. I think Bank of Industry they're also coming up with a bond soon enough. So commercial banks are literally playing with the CBN right now. They are CBN's biggest customers on whether it's CBN, whether it is DMO. They are basically the biggest customers. So we should just allow them to do their thing. That is where we find ourselves. Their businesses, they have to survive. They have to remain profitable. They are now in a bigger capitalization level. So any move has to really be about the business profitability, not necessarily patriotism right now. But then the MSMEs, so the microfinance banks, the merchant banks, the developmental banks like the Bank of Agriculture are the ones that will really step in right now to now begin to provide. I think I saw one of the Bank of Industry reports saying they've done so much for businesses already, and they plan to even do more. So that is where that should go towards. That is where we are right now in the economy. We cannot begin to. Yes, we've asked a lot of questions about how we got here, but now we are here already. We can only just keep moving
ahead.
Exactly.
We'll look for maybe a way out.
Exactly.
Now, you said something that I also saw it, and I think is interesting. Now, what do you think about the Bank of Industry looking towards coming up with their own bond offer?
Yeah, it is actually the way to go, right? So we've identified the fact that the capital market in quotes is our biggest. Is our in football times our Lionel Messi right now. So what we need to just do is to use that particular tool to our benefit, right? Okay. So if Bank of Industry can raise funds effectively from the capital market, it's a good one, right? We've also seen the power sector also raise bonds to sort out
electricity power issues.
Power issues. Yeah, so it's also happening here. So it is a good one. At least what that does is that because it's a bond, because it's a direct service bond for that purpose, it gives the responsibility of the Bank of Industry to ensure that there's a level of efficiency in the delivery of whatever they're giving loans to. What we've seen in the past is developmental bodies just additional loans without proper due diligence, and we start seeing people defaulting. Yeah, so now if you default, what happens is that people that have acquired the bond, people that you need to pay back interest, will be on your neck, and that would start disrupting whatever sovereign risk assessment that those major corporations do. So it is a good one, because what it does is it gives total full responsibility and get an accountability to the Bank of Industry to ensure that they actually get the right businesses to take the loans.
So
that they are giving
this is going to be specifically targeted on businesses.
Yes, the only issue I have is I think in part of the companies they are focused on. I saw agriculture there, and I was like, no, because Bank of Industry is for industry, is for extractive. Is for construction, is for a lot of industries that are, of course, not that are real sector industries, but not anything that has to do with services like insurance, financial services, and all. So when you now start in agriculture, there's a Bank of Agriculture already that should also probably be on the market also for its own bonds, right? So that we don't have this overlapping of functions that we usually have. That made the last CBN, additional anchor borrowers program, which is a developmental project, which is for. So I think that to make the job of the Bank of Industry easier, it should focus on industry, leave agriculture for the Bank of Agriculture to take care of, so that we can properly manage and understand what their task is and how they are stimulating the local economy.
Okay. Now, since we've already somehow found our way in the capital market, now let's look at the NGX, for example. I feel like there's a lot going on there. Maybe our next episode is going to be fully focused on the NGX, because there's a lot of activity and a lot of news stories around them. But today, it said they lost about almost 2.93 trillion naira in 2 sessions. Yet we still have the market that is still up more than 56% year to date. Now, is this a fundamental deterioration in corporate valuations or normal repricing after an exceptionally strong run?
Yeah, so I think that it is repricing. So this is the thing. The market is getting to a point whereby it is a sensitive market right now. People are jumping in basically because of the there's a word we use because of the there's a particular word I'm trying to get the word, but then there's the force at which the bullish run is more than just a spike now. It's more like this is more like a perception, like sentimental bullish run, which means that early players would want to always want to. Early players, deep pocket players are very cautious players. So what they want to do is probably set out targets for the year. If my portfolio gets to 50%, I'm taking out profit. I'm taking profit and I'm waiting for it to retrace and I'm re-entering. That is basically what good market players would do, and that is why you would see if as market cap gets to a certain psychological point, like 150 trillion, for example, they started thinking, okay, we need to like, and that's basically what happened. It is not a very big deal because 2 point something trillion is around maybe 2% of the entire market capitalization, and that is still decent, right? Some markets, whenever they are red, go as far as 10%, right? But then, so this is just more like a profit-taking conversation, and it will always happen. It will still happen again, and maybe 2-3 months before the end of the year, so just before the end of the year. And my only issue with the market is participation level. You would want more retail participation because it balances out the conversation. When you have too many big players, it now almost becomes what we see with cryptocurrency, with Bitcoin, for example. That it's almost like a cartel move. Like everybody it knows when to sell, and that becomes a problem. So that is what I feel like the market will become. It's not necessarily become. It's already like that. And unless we really increase market retail participation, where we can have diverse sentiments, because if the sentiment is always 75% in one direction, you would have this kind of moves in the market whereby everybody just can determine at what point everybody's selling off, So that is my only issue. If not, I think it has been a good run for the NGX in 2026.
Okay, now for someone looking at the NGX today, what should matter more? Is it the index that is falling, or which individual sectors and companies do you think drives this decline?
So I think that when you look at the figures, you realize that every sector took a bit of it in terms of that, right? So this is the thing. Yes, they are the value sectors, right? The separate of this world, right? The banking, the financial stocks and all. They're also the growth ones that a lot of people are cashing in on, which is the ones that can give you 100%, 200%, the better glass of this world, right? Form and code that can give you that kind of very massive numbers in a very short time, right? But then when it comes to profit taking, it affects everything. Right? You're looking at, because everybody has a portfolio of stock mixed across those two criteria. So you're taking profit from anywhere. So you cannot necessarily you can't say this is a particular sector that has been affected by the number, because when you look at it, you realize that it's an average, right? So if I am in the market, that's also how I will play it. I will also play it based on which of my long-standing stocks am I holding on for, right? In terms of to edge my position, and which of my growth stocks would I quickly pull out from and reprice at a new price. Those are the things that get people that are in the market will always look at. But I don't think it's anything like that leads to panic yet. It is not a panic conversation yet. It is just a normal market phenomenon. If market can gain 2 trillion in one day, it can also lose 2 trillion in one day. And that is
it. Now, and finally, would you say that this is a signal, like a buying opportunity for long-term investors, or a signal to just maybe sit back, watch it, take a moment?
Okay, so
to see.
To be honest, it's always a buying signal for the Nigerian stock market. Why? Because it is not yet there. it is still growing. All what you are seeing that everybody's shouting is because it has not been like that for a long time, right?
Okay.
From like the 2017, 2018 up until post-pandemic period, the stock market has not had that kind of attention like it is having now. Yeah. So when you look at sub-Saharan Africa, Nigeria is like maybe literally second or third. You get maybe almost moving to second right now in terms of the biggest stock markets, right? So the opportunity for growth is still there, right? And the fact that now we have even a shorter settlement period, so that means that it's even interesting for foreign portfolio or foreign players to come in. So I think that some people are still watching. Some people are still watching even because of elections, which might also still affect the numbers. Also, elections is in January, so there's likelihood that there will be a lot of profit taken in November because of the uncertainty that comes with the election, and there's a likelihood also markets will be closed for a while that election period. So, but as soon as elections is over, we might also still see, no matter who the president would be or will be by then, we will still definitely see another massive surge again, and that's why I've predicted we might be seeing over 253 to 300 trillion in terms of market cap by the end of 2028. Of course, we still have Dangote Refinery coming up with his own IPO. So it is still a very, very young market. So no matter the period or when you enter, you will still eventually make money because the market will still grow.
Okay, so you're saying that it is always a signal you should jump in as much as you can. Yeah. Thank you so much, Daniel.
Thank you.
So in the course of the belts that we've discussed, is there anything new that you want to add to all of the headlines that we decided to look at?
So I think that at the end of the day, we just keep moving. We keep doing the right thing. I think what is key for us is whatever systems we have in place, just keep ensuring that we keep making. For example, for me, crude, for example, let's keep pumping oil. We need to step in for even the entire value chain of the oil sector. But selling the petroleum products, or every of the value chain can expand the Nigerian economy faster than we even think, and we need to milk those opportunities.
Okay, thank you so much, Daniel, for being a part of today's Business Lens show. Now, before we go, let's simply look at the business word of the day, and today's word is liquidity. Liquidity simply refers to the amount of money readily available within a financial system. And today's headlines gives us a perfect example. The CBN putting 5.21 trillion naira back into the banking system means there is significantly more liquidity available to banks and financial institutions. So the simple way to explain it on the show is this. Now, liquidity is basically the money flowing through financial system. Too little can choke lending and economic activity. Too much can also create problem. It can create inflationary or currency pressures. So the question isn't simply how much money is there, it's rather where is the money going. The last line is strong for Business Lens, and I'm glad that you are here to take part of this. Now, and that brings us to the end of our headline review on the Business Lens, from oil production and customs revenue to 5.21 trillion naira in liquidity, an 11-week low in FX turnover, and almost 3 trillion naira that was wiped off the NGX into sections. The numbers are giving us a mixed picture. These are signs of improvement, but there are also pressure points that businesses and investors cannot afford to ignore. The real story isn't just whether the numbers are going up or down, it's understanding why they are moving, who benefits, and what happens next. That's what we keep watching here on Business Lens. My name is Divine Alex. See you on the next episode of the Business Lens. For now, bye.